Hello everyone, welcome to the first recitation of financial accounting. My name is Brian and I'll be leading the recitations in this course. Recitations are meant to review lecture materials for better understanding of the accounting concepts and prepare students for the problem sets. So what is the main goal of this class? The main goal is to learn how to use relevant accounting information to make better business decisions. The goal is not to make you accountants and to prepare financial statements from scratch. Before we get into the main concepts, I'd also like to share some tips for this course. First, put some extra effort at the beginning to understand key concepts. Rather than blindly memorizing, understanding why these concepts exist is critical. Second, take advantage of your recitations and use your time wisely. Third, homework and practice. Reviewing and practicing problem sets and problems solved in the recitations will get you a long way. So in this first recitation, we'll review the following concepts: accrual accounting and financial statements, recording transactions using the balance sheet equation, and practice some problems. Let's first discuss financial statements. What components are there in a set of financial statements? First, there is balance sheet. This is a snapshot of the financial position of a business. If you went to Facebook and looked at their bank account on December 31st, 2013, how much cash did they have? What were the value of their buildings? Balance sheet provides information to these equations. The second component is the income statement. Income statement records accounting performance of a company over a certain period of time, a quarter or a year typically. An example would be, what was Facebook's revenue during the year 2013? What was Facebook's expenses? Was Facebook profitable? Income statement can answer these questions. The third component is the statement of cash flows. This records over a period of time the sources and uses of cash. Did Facebook generate enough cash to cover its expenses during 2013? Would be an example of a question that statement of cash flows can answer. The final component is the stockholders' equity or shareholders' equity. This records the changes in shareholders' equity in the company. What is interesting about these four components is that each component within the financial statement is linked to each other. Let's see how these are related. As you can see in this chart, balance sheet is the parent statement and all three other statements flow to the balance sheet. Statement of cash flows records the inflows and outflows of cash and derives the final cash at the period end. This final cash number flows to the cash item in the balance sheet. Income statement records revenues and expenses and derives the bottom line net income number. This net income number flows to the statement of stockholders' equity, and the statement of shareholders' equity produces the final shareholders' equity number, which then flows to the shareholders' equity item in the balance sheet. The important equations used in the financial statements are called balance sheet equations. In this course, we're going to have four main equations that are frequently used to derive important accounting numbers. First, assets equals liabilities plus shareholders' equity. As mentioned in the lecture, assets are what a firm owns. Liabilities are what a firm owes, and shareholders' equity is the firm's net worth or owner's share of the business. Second, net income equals revenues minus expense plus gains minus losses. Revenues are something the firm earned by selling the firm's product or services. Expenses are something the firm spent to generate revenues. Gains are financial inflows that are generated not through the firm's ordinary business. Losses, on the other hand, are outflows that are not generated through the firm's ordinary business. Third, ending cash equals beginning cash plus net cash flow. And finally, ending retained earnings equals the beginning retained earnings plus net income minus the dividends. We will study what these equations mean in a few slides.